Hi, this is Tim Bost with FinancialCyclesWeekly.com, and we want to take a look at the Spring Equinox and what W.D. Gann revealed about the profitable trading opportunities that occur each year around the time of the Spring Equinox. W.D. Gann was a true legend in astro-trading, tremendously successful in the markets, and used methodologies that have never really been successfully duplicated despite many years of striving to imitate his techniques. Gann talked about changes of seasons coinciding with changes of trends in the markets. He said the stock market averages in individual stocks follow a seasonal change in trend, which varies in different years, but by knowing the important dates and watching them, you will be able to determine a change in trend very quickly. And of course, we look at W.D. Gann's work to determine the methods that he used in looking not only at the changes of seasons, but the changes at different times throughout the year that can produce shifts in market directions. The report on W.D. Gann on natural trend change dates has a lot of this information. You'll find it at bit.ly/GannDates. The Spring Equinox, however, is one of the most important dates in the year, and W.D. Gann gave this a lot of attention in his work. The Spring Equinox occurs each year around the 20th of March. It is the first day of spring, at least in the northern hemisphere. It's the first day of spring. This date is actually the first day of autumn in the southern half of the globe, in the southern hemisphere. But the important thing here is that the sun enters the sign of Aries at the time of the Spring Equinox. It hits this 0-degree Aries point, which is the beginning point of the zodiac, so it's a real power point for the entire year, and a very, very significant date to watch for world events and for the markets as well. The Spring Equinox will often provoke an immediate negative reaction in the stock market. For a day or two, prices tend to go down at the time of the Spring Equinox, but that reaction is often quite short-lived in duration. It doesn't last a long time, and more often than not, we see higher prices following soon after that. So, for example, we have an immediate market reaction to the Spring Equinox. We can look at the S&P 500 index. We've got a lot of years of history of the S&P. We go back and study what's happened with this in all of the previous trading years that we have a record of. And what we have found is that 53.3% of the time, the S&P goes down immediately after the Spring Equinox. On the day following that event in the cosmos, the change of season at the Spring Equinox, the S&P will be down more than 53% of the time, and it has lost as much as 3.2% in a single trading day right after the Spring Equinox. But, as we say, this reaction doesn't always last a long time. And so we ask this question: what would happen if we look beyond that immediate reaction that we see in the markets? Maybe we could come up with a better way of trading this effectively. So what we decided to do was to test a 14-day Spring Equinox trading strategy. Using this strategy, we buy at the close on the date of the Spring Equinox, and then we wait for 14 calendar days, not trading days, but 14 calendar days after the Spring Equinox, and sell at the close on that date. And this is what we found happens with the S&P 500 index, which, as we saw, was down about 53% of the time on the day following the Spring Equinox. If we wait 14 days, it is up 63.3% of the time, and it has had gains as much as 13.8% in that 14-day period. So a tremendous, tremendous contrast there. This is reflected in the Dow Jones Industrial Average as well. It's up 51.6% of the time following the Spring Equinox in that 14-day period, and has had gains as much as 8.33% during that time frame. The Utility Average does even better. 72% of the time it is up 14 days after the spring equinox, and has had gains as much as 14.18% during that 14-day time frame. The Dow Jones Transportation Index is also up 64% of the time in the 14 days following the spring equinox. The biggest gain it's had is almost 13% during that time frame. The NASDAQ Composite also up 56.5% of the time. It is up in the 14 days after the spring equinox, with gains as much as 9.33% during that time frame. And that also applies to the small cap stocks in the Russell 2000 index, up 54.5% of the time. The biggest gain during that 14-day time frame for the Russell has been 10.41%. This also carries over into the markets in Europe. If we go to the London Stock Exchange with the FTSE 100 index, we see that it is up 63.2% of the time in the 14 days following the spring equinox, with gains as much as 6.23%. And in Germany, with the Frankfurt Stock Exchange, the DAX is up 56.5% of the time, with gains as much as 8.45%. In Paris, the Paris Bourse, the CAC 40 index, 68.4% of the time. That's up in the 14 days following the spring equinox, gains as much as 8% in that time frame. We go to South America and Brazil, the Sao Paulo Stock Exchange. The Bovespa is up 70% of the time, 14 days after the spring equinox. The biggest gain there, 9.73% during that 14-day time frame. Over and down under, if we go to the Australian Stock Exchange in Sydney, the All Ordinaries Index is up 51.7% of the time, with gains as much as 7.5% in that 14-day time frame. In India, the Mumbai Stock Exchange, the Sensex, up 56.3% of the time, with gains as much as 17% during that 2-week period. In Tokyo, the Nikkei Index up 52.6% of the time. Its biggest gain has been slightly more than 10% in that 14-day period. Now, we can look at individual equities as well, and we often see very similar kinds of results. With General Electric, the stock's been traded for quite a while. GE is up 60% of the time, 14 days after the spring equinox. The biggest gain has been slightly more than 15% in this stock in that 2-week period. McDonald's Corporation is up 56.7% of the time. Biggest gain, 20% in that 14-day time frame. The Coca-Cola Company also up. It's up 2/3 of the time following the spring equinox. If we look at 14 days after the spring equinox, the biggest gain there, just shy of 8% for Coca-Cola. The Starbucks Corporation is also up almost 62% of the time. Its biggest gain in that 14-day time frame has been 13.24%. New Skin Enterprises up 52.9% of the time. Its biggest gain, 16.89% in the 14 days following the spring equinox. Deutsche Bank AG has been up 58.8% of the time, with gains as high as 25.5% in the 14 days immediately after the spring equinox. Amazon.com has done even better than that. It's been up 75% of the time, 14 days after the spring equinox, with gains as much as 38.09% in that 14-day period. eBay Incorporated has been up 60% of the time, gains as much as 16.9% in that 14-day period. Google Incorporated has been up 88.9% of the time, 14 days after the spring equinox. Biggest gain there has been 16.13%. But this is not true of all stocks or all indices. IBM, for example, has been down 61.3% of the time, 14 days after the spring equinox. Its biggest loss during that time frame has been a little bit more than 7%. Ford Motor Company has also been down 53.3% of the time. Its biggest loss has been 8.24%, 14 days after the spring equinox. And Apple Computer has been down 60% of the time. Its biggest loss in the 14 days after the spring equinox has been 13.40%. Now, with the dollar, and when we look at the currency markets, we see that the dollar has been up 54.5% of the time. Its biggest gain has been 3.35% in the 14 days following the spring equinox. Gold has been up 53.8% of the time. Its biggest gain in that time frame, 19.3%. Silver matches that very closely, of course. 57.7% of the time it has been up 14 days after the spring equinox, and its biggest gain has been 19.07% in that 14-day time frame. Now that is what we mean by our 14-day spring equinox trading strategy. We buy at the close on the date of the spring equinox and then sell at the close 14 calendar days later. But in doing so, if you're looking at this kind of methodology, we want to make sure that you're a wise trader. We don't use this spring equinox indicator in isolation. We don't use it by itself. We're always looking for other kinds of confirmation with our technical charts, with our understanding of the fundamentals of the markets that we're trading, and with other confirming astrological factors as well. So this is not something that we use by itself for trading. And of course, as with any other trade that we enter, we always use protective stops, and we have clear money management objectives in terms of how much we're willing to put at risk in any given trade. And of course, we remember that even with good odds, you'll still have some losing trades. You know, if we see a 60% likelihood of higher prices 14 days after the spring equinox, that means that 4 out of 10 times that happens, we're going to have a losing trade and lower prices instead. And we always want to match our specific strategy to the particular market or stock that we are actually trading. Now, as Gann said, the stock market averages in individual stocks follow a seasonal change in trend, which varies in different years, but by knowing the important dates and watching them, you'll be able to determine a change in trend very quickly. The key phrase here is a seasonal change in trend, which varies in different years. That means that this spring equinox indicator is not always consistent. As we look at the information on Gann's work on the natural trend change dates, we understand how many different factors he used in addition to the spring equinox indicator in determining his trading strategies. This is not the best strategy for every stock or market. We don't always come into any market assuming that we simply buy at the spring equinox, sell 14 days later, we will automatically make money. It does not work in all cases. Your results will vary from market to market and from year to year at the time of the spring equinox. Now, here's probably a good place to put our standard warning, which is that our backtesting shows us what has happened in the past, and we've shared those results with you. But that doesn't mean it will ever happen again. Past performance is no guarantee of future results, and you can lose a lot of money in your trading. But even if you don't have a guarantee, you can still study what has happened in the past, as we've done here, and improve your odds of success in the markets today. That's why we wanted to share this information with you. That's exactly what W.D. Gann did by analyzing the history of the markets and doing the back testing and understanding what was likely to occur with the planetary cycles in the trading of his day. W.D. Gann had the astro-trading advantage. That's what made him so successful in the markets. And you can profit from the astro-trading advantage too. Visit us at FinancialCyclesWeekly.com. Sign up there for the free astro-traders tip of the week and understand what the astro-trading advantage can do for you. This is Tim Bost with FinancialCyclesWeekly.com. Thanks so much for taking time to watch this video today.